is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with co-host Andrew Young. We were off last week as I was getting some, I think, well-deserved R&R in sleepy New Brunswick, Canada, a place where you're able to unwind and really take it easy. But now I'm back in Toronto, back in the big smoke and ready to dive in. We call it DeFi Decoded, but this week it's going to be a lot more like CeFi Decoded because a lot of news this week is coming out of some of the big brand name US companies like Coinbase and BitGo. Coinbase, I think we should start there. Andrew, they just announced something around a futures product. Can you talk about that and explain its significance?
Yeah, so Coinbase, obviously, up until now, has been a purely spot trading exchange. So you can only really trade, Bitcoin. I think they have over 100 or so crypto assets, which has been sort of, I would consider kind of fighting with one arm behind your back because, as we know, most of the volume in crypto is in derivatives. If you look at, for example, Binance, perpetual derivatives volume is roughly 10 to 15x its spot trading volume on any given day.
Wild.
Yeah, so it's pretty crazy.
That's actually insane. I didn't realize it was that high.
Yeah. I mean, when I looked at it a couple of days ago, it was kind of like 4 billion versus 40. I could be wrong on that actually, but yeah, it's typically a roughly 10 to 15x, just because obviously with derivatives, if you can go 10x long, the same dollar generates $10 more volume versus spot, and because you can get leverage, it sort of becomes the place to be for traders, which, as we know, generate most of the volume on an exchange versus just kind of like buy and hold investors, which tend to generate very little volume. So it's sort of like there's sort of two big things there. One is perps are the most liquid because of the leverage. Mm-hmm. They're also the best place for traders, which obviously is most of the activity. And then those two things sort of feed on each other. So Coinbase is finally, they never launched perps because they were never licensed to. And that actually led to the creation of Coinbase International, which is going to be sort of a, I guess, non-US offshore, I believe, derivatives exchange targeting perps. And I think it's not live, going to be live very soon. And so what this is, from what I can tell, is Coinbase has now won approval to offer regulated leveraged futures. So these are like traditional futures, not perps, for at least Bitcoin and Ethereum on their main Coinbase US exchange. Mm-hmm. So that's like really exciting. I'm not sure, the futures volume has not been as big, at least from what I can see, as sort of the perps. So it's like a really nice headline, and I think it should do a lot, but at the end of the day, I think most liquidity is still on these sort of offshore perps products. But I guess the one thing that it does potentially provide is a lot of, I guess it further establishes Coinbase as the sort of legit US exchange to trade crypto, right. And maybe sort of foreshadows a Bitcoin ETF, at least a leveraged Bitcoin ETF, getting approved as well. So I'm not totally familiar on this. What was your, I guess, read on the news?
Well, I mean, to your point, I think it's obviously a positive, and the market reacted positively. The stock was up, but pretty modestly, and maybe that's a reflection of all the things that you've just described about rolling this out. In a way, I wonder if it's similar to the announcement from PayPal about them launching a stablecoin. In this way in particular, like PayPal is a company that's very well regarded, innovative, fintech pioneer, and it says it's going to launch a stablecoin. Everyone's really excited about that. But does it have the ability to be as sort of, I don't know, flexible and and innovative, or maybe push the envelope as much as a smaller company like, say, Circle, or an offshore company like Tether? And is this sort of something that, yeah, if it works, it could be great, but there may be some implementation challenges. And I wonder if this, similarly with Coinbase, like Coinbase launches a futures product, but if people still prefer to use the perp, products from the offshore exchange, how much volume will they really capture from it? Like how big of a difference maker will it be? I also don't know the answer to that question, but I think that that's probably what's going through a lot of people's heads right now. On the topic of Coinbase, they've just announced that they are launching in Canada, which is a surprise to me, because as far as I know, they've been in Canada for like 9 years. But this was I guess sort of an official announcement where they said that as part of this, they were, I guess, re-announcing their new head of country, Lucas Matheson, who again has been in the job for I think 6 months, and also an integration with Interact, which is our payment processor here in Canada, to make it easier to onboard fiat currency into the exchange platform. So whatever you call, like, this is a launch of something that's already been in the market, but clearly they're making a big deal out of Canada, and I thought that was notable. For people who are listening internationally, Canada is a country that's got 40 million people, obviously high income and on a global scale, and has a high percentage of people that either own crypto assets or are interested in it. And that's reflected in survey data that has been published both by Coinbase and by others. So yeah, look, I mean, it's it's a market about as big as, I don't know, California or something like that. So it's obviously important. But like, why do you think there's a renewed focus on Canada from Coinbase?
Yeah, I'm not actually totally sure. I think one thing that's interesting, I guess two things. One is I was also kind of confused by the news that Coinbase officially launched in Canada.
Yeah.
Because from what I can tell, it's been live the whole time here.
Yeah, right.
At least for accredited and institutional investors, there's never any ceasing of service. I guess it did. I think there was something with Ontario though, where they may have pulled out for retail in Ontario, or at least for new account creation, a couple months ago. But yeah, I was definitely kind of confused. I guess this is just like their official launch. They're fully licensed. One thing that's been interesting in the Canadian market over the last couple of years is there's been a ton of consolidation. So about a year ago, the three of the biggest Canadian crypto exchanges all merged.
Yeah. Well, actually, that deal just closed like a month ago or a month and a half ago. But it was announced many months ago, as you pointed out.
Yeah, exactly. So that was WonderFi, CoinSquare, BitBuy, and I think CoinSmart. And then there was a couple other smaller exchanges that had gone rolled up. Yeah, and Coinberry also got rolled up earlier. So it was essentially like all five of the biggest Canadian crypto exchanges just got rolled up into like one public vehicle, which is now trading as WonderFi. So I thought that was really, really interesting. It also, I think part of that was, Canada's a relatively big market for crypto. Like I think we definitely bat above our weight, both in terms of like founders, investors, and then just in terms of just like total retail crypto activity. Yeah. But what was interesting about that is that most of those companies weren't actually public. And so they now both became consolidated into like one mega exchange, but also that mega exchange is now, a publicly trading stock, which is WonderFi. And so it kind of, to me, it wasn't kind of like the final nail in the coffin, but it was kind of it was a very strong, like, to me, it was sort of like the gauntlet had been laid down. Like this behemoth was now kind of like the dominant, like the market dominant force, at least within Canada. And so it's interesting to see. It's going to be interesting to see how that sort of local Canadian company deals with Coinbase, which is kind of obviously a behemoth of the US. And who knows, maybe long term, like Coinbase buys WonderFi or whatnot. I know there was some chatter a while back that international exchanges could look into local Canadian exchanges as like a way to fast track the regulatory process. So yeah, it's really interesting.
That's the thing that's interesting to me. I mean, all of the biggest exchanges in Canada, I mean, these were all independently not very big companies. And now as the combined entity, they are big, but they're smaller than Kraken and Coinbase is in Canada. It's my understanding in terms of, total spot volumes. But what they have that those others do not, based on, my read of the situation, is that they do not have the licensing to function as a full broker dealer, which is something that WonderFi does. So we have I don't know, people outside of Canada are probably thinking this is getting into the weeds a little bit. But we have a self-regulatory organization here called IROC, and WonderFi has an IROC broker dealer license, and that's something that can take years to acquire through the process. And so the question, therefore, becomes, well, if a company like Coinbase is really interested in Canada and really wants to offer a full suite of services, then maybe it'll go the extra step to get those other licenses. And if it does, how will it go about doing that? What is the opportunity cost of waiting 2 years to get that license? Maybe it's easier to basically assume it through acquisition, and in the process, gain some customers and some assets which are useful to your business. So that is a thesis I've seen kind of bandied about in this space, which is that, maybe WonderFi as this combined entity can stand alone and can compete against bigger competition, but maybe it itself might become the subject of a takeover at some point. So this is just a speculation, an idea that I've heard bounced around a little bit, but one that I think is kind of interesting. What's interesting about the whole situation with WonderFi is that, the company today has a market capitalization of around $100 million. And based on the press release they put out at the time of the launch or of the merger, of the consolidation, I guess it's a merger of many different parties. They said they had like somewhere between $30 or $40 million of cash and equivalent. So, this is a company with an enterprise value of less than $100 million. And if you look at the components, like all the different companies that went into WonderFi, each of those things at some point were worth way, way more than they were today. Like CoinSquare alone got financed 6 years ago at $400 million. So in a way, a reflection of how much valuations have come down, which makes this next piece of news that we're going to discuss, I think, all the more kind of notable, which is that BitGo, one of the large licensed custodians operating in the US, just announced a financing where it raised $100 million at a $1.75 billion valuation. Why that's notable, in my opinion, is that a year and a half ago, its deal to merge with Galaxy Digital fell through. And the valuation at the time, in a very different market context, was $1.2 billion. So this is a company that was notionally valued at $1.2 billion in a bull market. And in a bear market, is worth even more, which I think is kind of amazing. Andrew, I know this isn't really like your focal area, but do you have any kind of thoughts on that? Like, clearly, this isn't like a project per se, like a DeFi project, but it's, good companies that are operating in the space and are executing are getting rewarded still with robust valuations.
Yeah, it's interesting too, because so we obviously talked to Mike, the CEO of BitGo.
Yeah.
I guess that would have been about a year ago.
Honestly, that was one of our best episodes and one of our most widely viewed episodes. It was right after the FTX collapse and all about how to CeFi and centralized corporate custodians and exchanges restore trust. And he had some really valuable insights. So if people who are listening to this episode, please check out the episode with Mike Belchie from last fall. Go ahead, Andrew.
Yeah, I think one thing that's always really interested me about sort of the crypto equities versus crypto assets is they tend to be laggards to the underlying crypto market. So what I mean by that is you'll often see crypto assets sort of pump first out of a bull market, and crypto companies, particularly publicly traded ones, don't really follow as much, which I think is probably due to the fact that public equity investors aren't following the crypto markets as closely as we do. Right. And And what ends up happening is you get this almost like catch up increase. Again, I've only seen this in 2 bull market cycles, in 2017 and then I guess in 2021. And I guess it's just kind of interesting because like the public equity investors are a little bit slower than the crypto investors, but then there's almost like a vicious catch up.
But BitGo's
And
a
so,
private company. It's not a public company, right?
yeah, for sure. BitGo is a bit different. Obviously, it's a private company, and so I think like a lot of their investors are traditional VCs who also invest in liquid crypto. That's a lot different than WonderFi, where I suspect a lot of the WonderFi investors are, traditional equity investors that just
Yeah.
have WonderFi as their kind of like their crypto allocation. Probably very similar to the investor base of something like 9points Bitcoin ETF. Which is, traditional institutional investors that just want some exposure. Yeah, like on BitGo, to be honest, I'm not completely up to date on everything that's happening in the custody space. I suspect BitGo long term will look more and more like Coinbase. I sort of have this theory that there's going to be a convergence where the sort of custody providers, and maybe I could be wrong here, but custody providers naturally eventually become exchanges themselves, just because once you have the assets custody at your exchange, it's pretty easy to turn on swapping between participants. I could be wrong again on BitGo because it's been around for 11 years now, so clearly there's also space for just like a true pure play custodian, and I guess in some ways that also helps you. That also helps you if you're not competing with some of your biggest clients. But at least within the wallet space, typically wallets, which you can think of as like another version of a custody service, they historically have added swapping to sort of just as like a very easy revenue line. MetaMask is a good example. Others like Exodus also make sense, and the vast majority of the revenue come from that. So yeah, I mean, I guess it's just kind of wait and see. I think you're starting to see a little bit of a pickup in crypto raises right now. We bounced off the bottom. We've gone from 0 to 1 out of 10, I guess. So it's interesting to see, but at this point, really, like you have to be a true category leader within your vertical if you are raising a 9-figure round right now.
Yeah, I think that's right. Like on the valuation side of things, obviously the equity investors are in general not as immersed, I guess, in the crypto space as maybe the crypto investors are. And I think what's interesting about private market valuations versus public market valuations is that you always expect private market valuations to lag a little bit because everyone's reluctant to do a deal that might mark their valuation down. And we saw that in 2022, at the beginning of that year, as the bull market was starting to kind of roll off a little bit. A lot of private companies were still getting funded at like sky high valuations, even as the crypto assets had peaked months earlier. What makes this one so different is that we're kind of in the bottom of a bear market and we're seeing this big deal. So congrats to Mike. I would love to have him back on the show, Mike, if you're listening, to get an update on what's going on. The final thing, going to go back to a little bit of Web3 stuff, now that we've done CeFi talk, is this announcement from Zynga, which is the creator of Farmville. They've announced a new NFT game called Sugartown. Now, we've had a lot of conversations about NFT gaming before in the past. We had Ben Lee from Blowfish, and we've had a couple of other people talking about this. And, a lot of proponents of Web3 gaming like Yat Su, who's the founder of Animoca Brands, say that this is one of those areas that's going to help to onboard a bunch of people. What did you make of the news from Zynga? Andrew, anything special about it?
Yeah, I thought it was pretty interesting. It uses a dual token model. So you stake this Aura token, which acts as kind of like, they call it proof of ownership. And then by staking that, you can earn energy and win sugar, which is like their in-game, the in-game currency that's supposed to sort of lubricate the whole economy.
Yeah.
I thought it was kind of interesting because Zynga is always the company that, like, for example, I use to explain platform risk to people.
Exactly.
In the sense that Zynga, kind of the classic case, they built Farmville on top of Facebook, and then Facebook sort of just changed the rules on them and nuked a lot of their sort of revenue overnight. Because at the end of the day, Facebook controls the entire development platform, and that's called platform risk. And it's a big reason why a lot of people don't build at least like Web 2 software on top of other Web 2 software platforms, because at any point, the for-profit entity that controls the underlying platform, they have complete control essentially, and they can just effectively eliminate you overnight.
Yeah.
And Zynga is kind of like the classic example of that. And so it makes sense that they would be the ones to want to build on Web3, because obviously blockchain, you replace that for-profit entity, corporate entity that controls the development platform with, a decentralized network of validators where changes take a really long time to get through, and essentially nothing malicious can happen overnight that just nukes your whole business.
Yeah.
And so, and that's also why we see so much more. I think the pace of development within Web3 is so much greater, just because, there's far less platform risk, and then on top of that, everything's open source and transparent. So it's kind of funny that Zynga was. I think Zynga at this point is a bit of a shell of itself compared to what it once was, but it was kind of the perfect ending to the story that they're now building on top of this. In terms of the actual game itself, obviously, I have no idea. It's not really live yet, but it is a really good sign that the really big game studios are now starting to build Web3 games.
Yeah. But Zynga's not really a really big studio anymore, is it?
I'm not sure. At least it's like a reputable one, I believe.
Yeah.
Where it's
a
like
lot of reputable studio. I know Sega, and I think, if not Epic, I know that the CEO of Epic's talked a lot about it. And then, the Blizzard Activision chief operating officer, Daniel Allegre, went over to Yuga Labs. So we're definitely seeing like more and more of the buy-in, I think, from the big gaming studios. And this strikes me as like another example of that, right?
Yeah, for sure. And it's going to be interesting. Like the Web3 gaming space during the last bull market, the games were not the best, to be honest with you. A lot of the activity and user numbers were entirely there because people just wanted to make, like, it was almost like an income generating opportunity, more than like a fun experience. And so when crypto crashed and the user numbers plummeted because obviously there was no more income to be generated, it created this huge rift and almost like debate within the Web3 gaming community, which is, does play to earn by allowing the game essentially have economics built into it? Do you effectively make it not fun? Like, can the two coexist? Can you make a game where, like, I control all of the assets in the game as real money and I can actually sell them for real money? But at the same time, does that sort of cheapen the experience and almost make it like work versus like an actual entertaining game? And at the end of the day, you need people playing for entertainment, who want to like bring new money into the ecosystem for it to work. You can't just have everyone playing the game and earning money and taking money out. That's not sustainable. So yeah, there's a huge debate right now on whether Web3 games even make sense, like video games. And so I think this market cycle will sort of answer that question. I personally actually think there's no reason why it can't be both, I think. Again, I don't play as many video games as I did 10 years ago.
Yeah.
But
we're kind of the wrong people to talk about this a little bit, because like I haven't played video games since like, Grand Theft Auto San Andreas, I think was the last video game I played. It was like,
you didn't play any FIFA in university?
Oh yeah, no, I play. I was like playing. I think probably at the age of 24, I stopped playing video games, and I'm a lot older. But anyway, that's beside the point. Like, we keep talking about these games, but like I'm not really the target market for this kind of stuff. You mentioned will people are the two things compatible? And my view is like, I mean, yeah, obviously, like the model right now with video games is free to play, where basically you get some version of the free experience, but if you want the full experience, you have to pay. You have to pay for levels, or you have to pay for assets in games. So like if you're going to buy assets, you might as well own them, number one. So ownership using blockchain, using NFTs or whatever, I think is a no-brainer. And then the second thing is, just because like there's a component that involves like earning money doesn't mean that that takes the fun out of it. I mean, like I don't know, I think of games of skill in a casino as examples where people are playing a game, but also there's financial stakes where you can win and lose, where you can earn money, whatever. And people still do that because they like to make the money or whatever, but because it's also fun to play the game, right? So to me, like ownership is a superpower for virtual assets and games. I think that's something that is totally underexplored. And then B, of course you can make money and have fun at the same time. Like obviously, we have ample evidence of that. So I just think it's a matter of like game design, like figuring out a way to make it work, and not making it just like click a button a million times to earn $1 or whatever. I think that it's been bad game design, not bad fundamental idea, right?
Yeah, exactly. Again, I'm not the right person for it. I tried to play Axie Infinity in the last bull market, and I thought I didn't think it was that fun. But I mean, I also just didn't get into it enough to really know. I think some of the first person, like there is a thing with there is a very clear like business strategic advantage to tokenizing a game. If you think of a video game, particularly an online one, as like a network where you need to have enough players to make the game fun. So like imagine GTA 5, Grand Theft Auto 5, but like instead of having NPCs in the game, like everyone's a real person. It's only really fun if there's a lot of people in it.
Yeah.
And so and tokens are incredible tool to building network effects, because you can essentially use financial incentives to bootstrap the network and get over that sort of initial chicken and the egg problem. And so for those types of games, it makes a ton of sense, I think, because it allows you to just build a user base, like a minimum viable user base, much easier than it is to just do it by itself. Mm-hmm. So I think that makes a ton of sense. But yeah, I mean, it has to be the right game. It can't really be, it needs a game that benefits from network effects, or else it just doesn't really make sense. And I think the token just ends up being a drag on the experience.
Yeah. Well, I don't know. We'll see if Zynga can figure this one out, but I think it's encouraging that there's lots of different groups trying it. And I think that they will, for all the reasons I mentioned earlier. I think that there's a real opportunity, I think, to create to enrich the gaming experience, not to like substitute one thing for another, but to actually like make it better. Like why not play a game where you have stakes and where you can own your assets and take them with you and have property rights online and engage in a more sort of immersive, fully formed online economy. I just think that's like a really cool idea. So anyway, that's it for this week. Next week, it's so interesting, Andrew. We have a guest booked who can shine light on this Canada question. I'm not sure I've told you about this, but we're really excited about it. I won't say who, but one of the senior most executives from one of the world's biggest crypto exchanges is going to be joining us on the show. So we'll see you all next week. That's it for this week's DeFi Decoded. I'm Alex Tapscott, and have a good one. Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.